hello and welcome. You are watching Business Plus here on News9 Live. I'm Krishnakumar and joining me in the studio is my friend and colleague Karthik Malhotra, and we are beginning with a very important story that has been making headlines for the last few days, and that is RBI, the Reserve Bank of India's crackdown on lending and lenders, both lending via using shares as a collateral and gold as a collateral. Both NBFCs or non-banking financial companies getting under the RBI radar. It was first IIFL and IIFL stock tanking over the last couple of days by 20%, hitting lower circuit on both days, and then it was JM Financials. But bear in mind, this is the latest as far as this week is concerned. The Reserve Bank of India's crackdown on India's financial services sector has been ongoing. It began with Bank of Baroda a few months ago, and then came the big news a couple of months ago in the form of Paytm in fintech sector. Now it's all about lenders and also all about lending against a collateral. Karthik, I'm going to begin by talking to you because we have a very special guest joining us to help us understand what this RBI crackdown means. But let's first put this into perspective. Karthik, what is happening here at this stage is that we're seeing a variety of crackdowns. We've also seen a crackdown on Bajaj Finance in between as well, which I haven't mentioned in my introduction. But the fact of the matter is that it's a regulator, be it Paytm or be it anything else. If you ask the RBI today, it will say that we are doing this as a job because that's what the regulator's job is. The regulator's job is to protect the people of this country, is to protect the people who trust India's financial services sector. So in that sense, you can't really call this an overdrive, can you?
I would definitely call it an overdrive, but a positive overdrive, Krishna.
Okay.
I would not look at overdrive as a negative word. I would actually, in the 20 years or so that you and I have both spent in newsrooms, most of them being business newsrooms, I don't think we've seen a series of crackdown after crackdown after crackdown in such frequency by any regulator and no other governor, in fact, at RBI. So I think it is definitely a series of crackdowns. It is a series of the RBI, being very, very sure of what it is doing, being very firm-footed, and not really being shy of using the heavy-handed approach in implementing these crackdowns. RBI is not shy of taking hard decisions, not shy of taking tough decisions, and not really waiting for any bubble to burst before it really steps in.
Fair enough. Not waiting for a bubble to burst. We have Mr. Srinath, policy researcher and corporate advisor, now joining us live all the way from Kerala. If I'm not mistaken, Srinath, that's where you are. I don't know, what exactly you're researching over there. I'm sure it's something very, very interesting, and we'll read all about it on your blog eventually. I'm guessing if not, you're doing this to advise a particular company. We wouldn't know, mystery man in Kerala. But the question that I have to ask you is that how do you view you take into account what's happened this week with JM Financials and IIFL, but it is coming on the back of huge crackdowns. RBI, the Reserve Bank of India, is already in the news of what's going on with Paytm. We've seen it with what happened with the Bajaj Finance as well. Clearly, lending is an area that the Indian banking regulator is focusing on.
Yeah, that's true, Krishna, but I wouldn't call it a huge crackdown at all. Okay. It's not been huge at all compared to our market size. And why is it surprising for us? For the simple fact that a lot of these companies which were seen as holier than thou are also being penalized. And I think this is the new RBI or the new market avatar that we see. We must get used to the fact that the regulatory penalties that India has imposed have been very minuscule. But in the coming months or years, I think some of these penalties are going to run in lots of crores, not just simple lakhs and crores. And I think that's a lesson for anybody in financial services, that if you're in the business of financial services, be ready to be audited, be ready to be penalized if you are found faulty anywhere else.
Okay. But what happened with IIFL and IIFL stock is a penalty in itself, isn't it? The stock tanking by 20%, hitting lower circuit on both days. So in that sense, the message that an RBI sends out with a crackdown like this becomes very, very important and has an impact on the financials of the company, one way or the other.
So Krishna, that's a very important point you're making, but it's both ways. Not because they're listed entities that they're feeling the pressure, but because there are a lot of finance companies are being listed, the regulators, not just RBI, including SEBI and IRDA, are going to find themselves increasingly under pressure to be a lot more tougher on their entities. they will have to act well on time and penalize their entities for any faults, whether it is process gaps, whether it is governance gaps, or any of the issues. They cannot wait for a long time. Simply because we are also not just, as you mentioned in your opening address, about consumer protection, but this is also about stakeholder protection, right? I mean, these are listed entities, which means that they're also having shareholders who may not understand the complexity of those businesses.
Srinath, I just wanted to come in here and hey, thanks so much for joining us. I know you're traveling and it's not an easy day for you to be here with us. But you know, something very interesting which RBI Governor Shaktikanta Das had said soon after the decision of the last MPC, where he held on to the repo rate, was that perhaps there is also now likely to be the RBI's intervention into the e-trading platforms. We haven't seen, thankfully, yet anything untoward from the likes of Grow and Zerodha and those companies. But RBI was very categorical in saying, in fact, the governor was very categorical in saying that e-trading platforms is something that the RBI would want to intervene in. What is your reading of that message?
So again, one of the reading, if you see it in conjunction with what they've acted against JM Financial, has been that the loan against shares or lending to HNIs specifically for buying shares in the run-up to IPOs is something that's of concern, not just for RBI, but also for SEBI. So in the financial markets, for Karthik's and Krishna's exuberance, I think we also have to await SEBI's orders, expected later this week or next week, on loans against shares, and is it going to impact either of these entities, because IIFL and JM are also equally popular when it comes to loans against shares, or for that matter, not just e-trading platforms, Karthik, but also all the wealth management platforms, which arrange for a lot of these loans for their clients to invest into stock market.
Is there fundamentally, Srinath, is there fundamentally a problem with that particular model? If I go to a lender, if I want to participate as a retail investor in the IPO story, I don't have the money. If I go to a lender, take that money and try and bid for an IPO, is there legally a problem with that approach?
So legally not a problem as long as you're sticking to the collateral limits basis the security that you give. But the challenge in governance will be, let's say, if I am going to list one of my entity or subsidiary and my own lending platform or the wealth manager within my own group arranges loans for you to invest in my IPO, where is that conflict of interest lie or slow down? And that's a challenge that there is there. And we're also seeing the intersection of two regulators here. One is RBI and SEBI. And I think the classic case is going to be when SEBI's order is out about its investigations around loans against shares and or IPO. I mean, if you look at the last 2 years, Karthik, we've had a huge run-up of IPOs, right? And every IPO was oversubscribed. And there have been times when you have not even heard of that company and it is oversubscribed. And I think, and somewhere, where is that easy money? And it also tells us that there has been a FOMO investment. And that is the worry for regulator because, I mean, let's face it, as a country, we want capitalistic behavior, but with socialistic regulation, which means that if I lose money because I took wrong advice, but I still would blame the regulator. I mean, it's a very, very thankless job being the regulator. So I would support them saying that they will have to be far more tougher. I mean, let's say in some of these arbitrage, let's say in the Western world, would have a penalty of few $1 million, right? And here we penalize 2 lakhs and 3 lakhs. I keep joking. If you give it to a lawyer to read the regulatory order and explain to you, the lawyer costs more than the actual penalty.
Right, Srinath, Sridharan, they're getting us, in a capitalistic system. We need socialistic regulations. Coming from a so-called communist state, he is currently in Kerala, but we're going to leave you to it in Kerala. Have a wonderful trip. Hope to see you back here on the show more often very soon. But for now, thank you so much for taking time out, Srinath. With that, we need to take a very short breather here on Business Plus. We have lots more coming up on the other side. Don't go anywhere.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News9 Plus. Download now.
There's a new video around what deepfake can do.
We have seen a trailer of this a few days back.
Rollers should not be only on the platform.
We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When we look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
You are watching Business Plus. I'm Krishnakumar and with me is Karthik Malhotra. And right now we're putting the focus on a story that's been on all of our social media feeds, and that has got to do with motivational speaker and podcast host Jay Shetty. Is he a monk, as he claims to be, or is he a liar? We're talking about an Indian man of Indian origin who recently officiated the biggest Hollywood wedding in recent times between Jennifer Lopez and Ben Affleck. Mr. Jay Shetty has millions and millions of followers across social media platforms. There you go, over 15 million followers on Instagram. A man whose words are taken to heart by so many for all kinds of needs, for life direction. He calls himself a life coach. He had claimed that back in the day, in his teens, he had spent 3 years in India at an ashram being a monk, and then eventually got back to the US and became this motivational speaker and life coach and podcast host. His podcast On Purpose became one of the most heard podcasts in the world. But today, he finds himself in the middle of a huge controversy. Was he lying about his life? Was he ever training to be a monk? Because those are the credentials he used to tell people that he understands life better than everybody else and able to brand out of himself. So, let's understand brand Jay Shetty. How much of it is truth and how much of it is lies, how much of it is half-truths. And to help us understand that, who better than brand guru, Mr. Harish Bijoor, who now joins us live on the show. Harish, great to have you with us on the show. You know, anything to do with brand, you're one of the best people to help people understand this, building brands. Jay Shetty built an incredible brand around his personality, correct? And in his words, charmed everybody from common people like us looking at our social media feeds to the biggest of biggest Hollywood celebrities. But today, they're saying he has allegations of plagiarism against him. There are a lot of quotes he used that are not even his original quotes. They're taken from elsewhere. And also, more importantly, for the man who claimed to be a monk, who gave up being a monk to help people live life better, he was never really a monk. What is going on here, Harish?
Firstly, I think Jay Shetty is certainly a brand. You and I know that. And that too a brand which has monetized, a persona brand who has monetized humongously. It's, followership which gets translated into revenues, books, talks, podcasts, and numbers of things. So if you really ask me, is Jay Shetty, has he got content? Has he got meat? I think he has. The whole world has accepted that he is able to speak, and he is able to speak a fair bit of sense. Now, within that sense quotient, I think the bubble has burst as of today. Because I think, somebody has done the due diligence and has found holes. And I think it's only right that those holes be pointed out and brought to the fore. A brand is that way. A brand gets floated. And much of the time, persona brands are at risk. Fundamentally because a lot of persona brands do not necessarily pack integrity into them. And that's one of the reasons I keep discouraging people from building and making brands of themselves. Never ever brand a human being. I keep telling people, if you're a wolf, call yourself a wolf, brand yourself a wolf. But if you're a sheep, brand yourself as a sheep. But don't go and tell people that you're a wolf in sheep's clothing or a sheep in wolf's clothing, because that's wrong. And I think that's exactly what's happened in the case of Jay Shetty at this point of time. And I think the judgment is not yet out on him.
Harish, I want to just step in here and help us understand in a management framework. There is obviously this greater sort of, you mentioned integrity, but I would simplify it and say trust. So brands work on this fundamental of trust. You can package something well, you can advertise something well, and you can sell it initially. Thereafter, for you to sustain that basic component of trust is something that cannot be compromised on. Do you see this pretty much a trend? Because we've seen a lot of influencers, a lot of social media stars actually take this very basic component of trust very lightly.
Yes, that's a very good point that you raise. The brand fundamentally is a trust, and that trust cannot be belied. Because, a brand, as per my definition, a brand is a thought, a simple thought that lives in a person's mind. So Jay Shetty is a simple thought. His thought lives in people's minds. And people worship that thought. Many of them worship that thought. But one small little prick, one small little lack of integrity, and off goes the brand and becomes a negative. So if you look at it, this trust is being belied, and possibly that's an issue. And it's a big issue. Because it's people feel cheated if a brand you tend to love, you tend to worship, you tend to recommend, you tend to follow, go awry. In the era of social media, I think a lot of persona brands are making a big mistake, and I think people need to step back, be a little more real. I think there's a line today in young society which says, "Just be you." Don't try to be something you're not. And I think that's a good piece of advice to every influencer, every social media influencer, to say, just be you. If you're faulty, show those faults. If you're good, show the good, but don't showcase.
Right.
Right. Here you have an issue where you're talking about a man whose net worth is over $4 million according to reports. He runs courses where you can learn to impart his style of teachings about life. Those courses cost several thousands of dollars. After a point, breaking trust and breaking financial trust as well. People who are buying his books, people who are buying his courses. This goes way beyond just like unfollowing Jay Shetty on social media. There are people who've lost money because of Jay Shetty.
Yeah. Brands are an asset, but they also leave back a set of liabilities. So at this point of time, there could be a brand which you worship, which has fallen from grace. It becomes a liability. And that liability is a scar left back on those who worship the brand a lot. But this has happened in the case of religious gurus. It's happened in the case of influencers of various kinds. It's happened in the case of Bollywood stars. It's happened in the case of cricketers who were caught in the turmoil of betting, etc., etc. A cricketer, the same thing has happened. Let's say, you said that, I love your cricket, and you followed cricket, and all of a sudden you see that matches were allegedly fixed, and somebody threw a towel somewhere, and therefore, that's a sign to think. Imagine the state of those millions of followers of that cricketer. How do they feel? I think the same kind of a feeling would happen to followers of Jay Shetty. I think it's Jay Shetty's time to stand up and clarify. It's time for Jay Shetty to put together possibly a white paper and say that, hey guys, all this is totally wrong and this is the truth, if that is the truth.
So, Harish, if I can just play devil's advocate on behalf of Jay Shetty for just a minute, tell me this. A 22, 23-year-old lad just out of school cooks up a story, right? Maybe to impress a girl, maybe to get a few extra followers on Instagram. You cook up a story, that story ends up serving you well. 10 years, 15 years down the line, I believe Jay Shetty is 36 now, 15 years down the line, how do you correct that narrative? I mean, think about the poor man. He cooked up something for a very limited purpose that made him a celebrity and now he's stuck with it. What does he do now?
Yeah, I think, the idea is this. If you tell one lie, you can't stop because you need to tell another lie to cover that lie. And you tell yet another lie. When you build a house of cards, the house of cards is bound to fall. You just can't, build a foundation which is much more solid. So I think the idea simply is this. Come clean with it, be straightforward with it, and I think the world of your followers will forgive you. Jay Shetty, at the end of the day, is a great, great thinker, is a great, great speaker. And I think whatever he's spoken, whatever he's thought, has possibly influenced millions of people, okay? Now, you can't take that out of Jay Shetty. Let's remember that. But it is Jay Shetty's role now to stand up and say, hey, I'm a monk, I'm going to stand up and I'm going to tell you what the truth is. And at the end of the day, people are forgiving beings. Those who tell the truth get forgiven. But so few of us tell the truth. That's a problem.
Wise words coming from you, Harish. Definitely. I mean, I really wish Jay Shetty is listening. But my only concern is that he already had claims of plagiarism that hit him in the year 2019. He sort of, blew past that, didn't really answer, just took down some of those Instagram posts which they claimed was plagiarism and continued doing what he was doing. I really wonder what he's going to do. Hopefully he listens to you and owns up to what's going on. But for now, Harish, we'll let you go. Thank you so much for taking time out to be with us here on Business Plus. But before we wrap things up, we have an important piece of news that we want to give it to you, and that's got to do with the Crisil Ratings. That came out. Crisil came out with its report titled India Outlook Report, and according to that report, India's GDP is set to grow at 6.8% for financial year 2025. In that report, Crisil said, and I quote over here, after a better than expected 7.6% this fiscal, India's real GDP growth will likely moderate to 6.8% in FY25. And the report mentions, according to that growth rate, that by the year 2031, India will become an upper middle income nation. That's about 7 years from now, and its per capita income will rise to $4,500. In addition, by the year 2031, India will become the third largest economy in the world, and its economy's worth will double to $7 trillion. Currently, India is indeed the fifth largest economy in the world, with the United States, China, Japan, and Germany as the top four. And with that, we've completely run out of time here on this edition of Business Plus. Thank you so much for watching. This is Krishnakumar signing off.